Hey traders, do you want to learn how to trade head and shoulders pattern? In this video I prepared for you a very good example of the head and shoulders trade that I took today. It is based on the price action on a top-down analysis. I will explain to you how I select the entry point, how I place my stop loss, and how I select the targets. So don't forget to like this video, subscribe to my YouTube channel, and let's start. Right traders, in order to discuss head and shoulders pattern trading, we will analyze silver, and here we will execute the top-down analysis. I want you to tell what is happening on the instrument, I want you to see the global picture, and for that reason we will start from a weekly time frame, because on a weekly time frame a very important thing happened recently. As you can see, silver is trading in the long-term trading range. Here is the resistance of the range, and here is the support of the range. And you can see that for quite a long period of time the price perfectly respects the boundaries of that range. Recently what happened? We saw the test of the support of that range. And look at the candlesticks. First of all, we formed a doji candle on that. Then we were nicely rejected. Then we got a wick bullish candle. And just in 4 hours, this weekly candle closes. So we have the bullish engulfing candle right here. So, chances are very high that from that support of the range, the price will grow. Yes, we will expect here a strong bullish rally, and most likely we will see the growth right here. But also we definitely need some confirmation. Yes, we need to analyze lower time frames, find some confirmation that tells us that the market is really reversing. Yes, remember that just one single time frame is not enough for us to make a trading decision. We need the confirmation. So now let's analyze the daily time frame and let's check what we have there. Hey traders, do you want to learn price action patterns? Do you want to see how I trade them live? If so, I want to invite you in my premium educational group. There I show you how I analyze the market. There I teach you technical analysis. There I teach you my trading strategy. With my students, we trade the price action patterns together. I show you my active trades. I show you my stop loss, my take profit level, and I'm trying to explain to you the entire reasoning behind each and every trade that I take. For more details, check my website. It is vasilytrader.com/private group, or text me in one of the social networks. I will give you more details. On a daily time frame we can see how nicely the market was falling, and moreover here we can see in details how the price reacted to the underlying structure support. You can see that the price was falling sharply, and once it tested the lower boundary of our support, it started to grow. Yes, we see very strong bullish rally right here, and if we actually pay close attention to details, to price action, we can identify here multiple confirmations. Yes, first of all, let's pay close attention to the low highs of this bearish trend right here. We can draw right here a very nice falling trend line, major falling trend line. You can see that this major falling trend line was respected multiple times in the past, and each and every time when it was reached, sellers were selling from that. But what happened recently? What happened this week? We saw the breakout of that trend line. We saw the daily candle close above this trend line, and definitely it is a very strong bullish clue. It is a very strong bullish signal. It signifies that sellers are quite weak. Yes, they are not willing to start pushing from that trend line, and instead bulls just broke and closed above that. But here we have something else. If we follow the price action, here we can spot a very peculiar reversal pattern. Here was our strong bearish impulse, and the price here sets the low. Yes, then we see the retracement, and here the price sets the lower high. Then we dropped again, and here we have a new lower low, lower close. Then we started to grow, and we retested the previous high right here. Yes, the previous lower high, setting the equal high. Then the price started to fall, and instead of going lower, instead of retesting the current structure low and setting a new low, instead we have a higher low right here. And then look what happens. Then the price grows, and we have a new higher close on the daily. We violated the previous highs right here. Yes, and set a new high. Definitely it is a very strong bullish signal. But also here we have a perfect example of the inverted head and shoulders pattern. And in this pattern, it is very important for us to underline one important element, the so-called neckline. The neckline here is based on that lower high and on that equal high. And also we take into consideration the candle closes, so we have quite extended neckline. That neckline is important because just in the recent past, sellers were willing to sell from that neckline. You can see multiple bearish reactions from that. And actually right here, what happened on silver? We got a double breakout. We got the breakout of that major falling trend line, and also we got the breakout of that horizontal neckline. Yes, and it is a very, very, very important clue for us to consider. Now this pattern may give us a very great opportunity to buy silver. So let's discuss how we will buy silver wisely. Let's discuss where will be our stop loss, where will be our targets, and how we will take this trade. The most important thing for us to spot right here is the entry level. Yes, if we want to trade this head and shoulders pattern wisely, we need to know where exactly will be our entry. And as you know, I'm a conservative trader, so I prefer the retest entry. But our neckline right here is quite wide. So where exactly will be our entry point? Let's take away these boxes, yes, and let's pay close attention to the price action. For us, what is the most important thing right here is the price action. Here I wanted to underline for you that structure level. Yes, you can see that based on that level, we have this low high, then the equal high, and then you can see that after breakout of that horizontal structure, of that trend line, that point, that level matches perfectly with the broken trend line. Yes, so here we have like a confluence point, and that confluence point will be the perfect point for us to buy from. And actually you can see that that level was already retested, so I already have my active long position right here. With our entry lying on that level, where will be our safe stop loss? Our safe stop loss will be below the right shoulder. Right shoulder gives us a quite strong structure support. Yes, and here it gives us a very nice protection from occasional spikes, stop hunting, and volatility. Yes, so my stop is lying right here. Also, with such a stop placement, we will have the protection from that major falling trend line. Yes, that is also right now turned into a very strong support. Then, where will be our target? Our first target is the closest strong structure, strongest strong key level. You can see that right here, the closest strong key level is that structure. Yes, you can see how nicely the price dropped from that structure in the recent past. So here's the risk to reward that we can get from the first target, 1.36. Not that good, but you must remember that it is just the first target. Here we are taking a swing trade. As you remember, in a weekly time frame, we are trading within a major horizontal trading range. Yes, and as we know, most of the time when the price reaches the support of the range, it starts growing all the way up to the resistance of the range. So our second target right here will be the spring's highs of this year. Yes, that major structure cluster right here. And with that in mind, yes, let's measure our risk to reward right here. What will be our risk to reward for the second target? It will be more than 4-1. Yes, and you can see that with such kind of a risk to reward, we can catch very, 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 very nice winner right here. Let me share with you, by the way, some clues for the trade management here. Considering the trade management, remember to protect your trading position. By protection, I mean that once the price reaches our first target, move your stop to entry. Make your position risk-free. We call it the position break-evening, and I always apply this technique when I trade the price action patterns. So I say that again, once the first target is reached, you take your stop and you move it to entry. Secondly, I would recommend closing like 40% of profits based on the first target, yes, and the rest you keep, and you should let the price reach our second target, yes, and occasionally, once the price goes higher, monitor the key levels. We have the key level right here. we have the key level right here. And once the price breaks this key levels, move your stop. Yes, apply the trailing stop. Protect your profits. Never forget about the protection. Once you see the breakout of that yellow structure, yes, move your stop just below that. Once you see the breakout of that yellow structure, again, move your stop below that. Yes, that is how you will protect your gains. And in case if the market is reversing, you will still make a very nice profit. So that is how we trade the head and shoulders pattern. I hope you enjoyed this example. I hope you will take that trade with me, and hopefully we will make nice money on this swing trade. For more education, for more tips, for pattern trading, don't forget to check my premium educational group, the link in the description below. Please like this video, subscribe to my YouTube channel, and I will see you next week.